Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com with a Forex quick look at the New Zealand versus US dollars. We head toward the end of the current week and look toward the beginning of next week's trading. What levels are in play? What are the biases? What can we look for? What do we do this week? Well, that's going to be discussed in this video. First off, this currency pair is reaching to new session lows in the last few minutes of trading, or the last hour or so of trading, as the London/European traders look to exit. And in the process, the price is down into a key swing area between 0.5985 and 0.600, let's call it 2. In between that is the 61.8% retracement of the move up from this low to this high right here. That level comes in at 0.59989. Let's call it 0.6000. So basically stay below the 60 level in the New Zealand versus US dollar is going to be a new mantra or short-term bias defining level for this pair. If we move below the 85 level, that should open the door to more downside. By the way, this yellow area is defined by a number of different swing lows and swing highs going all the way back to September of 2023. Again, this is the 4-hour chart, so it extends back quite a long way. It was a support and resistance through here. Yes, there were moves above it and below it, but this area pretty much did a good job of either finding resistance or finding support. Did the same thing here and here before finding support here and here, moving to the upside. It wasn't until, well, today that the price has come down back into that area right here. So this is the first look at it. A lot of times there is some support buyers against this level, especially after a long while being away from it. So be aware of that we could see a rotation back to the upside, and that might see the pair move up to, let's say, test this low right here, going back got up at 0.6037. Now let's take a step back further and see what we did in trading here this week that gave us this bearish bias. And we started the week off right near the trend line right through here, testing swing lows. Also, this green line right here represents the 200-day moving average, and we moved briefly to the upside and then fell back below that level, getting below this low right here in the process. But the pair could not sustain the momentum, and we had the New Zealand versus US dollar move back sharply to the upside, helped by that FOMC rate decision, of course, which lowered the US dollar, at least briefly. That move to the upside took the price above all these swing levels, and also that 200-day moving average above the trend line again, but found resistance sellers ahead of the falling 100-bar moving average on the 4-hour chart. And when things started to unravel in trading yesterday, and we saw dollar buying, we saw continued selling to the downside, that took the price back again to this low, found support buyers against it briefly, and then fell below it in trading here today, falling to our new session low. So sellers are definitely taking more control. We are below the, been using this term cluster of moving averages. Really can go all the way up to these levels right through here, where all these moving averages come in play. Also, we're below the 50% midpoint of the move up from this move from this low to this high, which is also more bearish. So staying below, let's say this yellow area right through here, 50% retracement, keeps the sellers more in control for the New Zealand versus US dollar, but at the same time, would be surprised to see some buyers against this level, just because it's returning to that swing area where traders can define the risk and limit the risk against the level. If the price were to go below this level, however, I would expect a quick shift back to the downside for the New Zealand, because this bias is to the downside for this pair. Of note, also from a longer-term perspective, or from this perspective, is of this box right through here, where we had a number of different swing lows and swing highs, and what was a significant, not this week but a few weeks ago, was at the high price here and here, stalled at the same level. That started the ball going to the downside. Yes, we moved outside of that box in trading earlier this week and moved back above it thanks to the FOMC, but we are back below that level, and that keeps the sellers more in control. So there you have it, a detailed look at the New Zealand versus US dollar from a technical perspective. What we did this week, what we can look forward to next week. The bias is more to the downside, but we're sitting at a decent support here that could lead to a short-term bounce we'll see how far that bounce gets. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.